Hello and welcome. You're watching ET CFO. Over the last couple of years, the financial sector landscape has undergone a massive shift. Non-bank lenders have come on the horizon, and today we are witnessing a huge issue of liquidity in this space. Today, to discuss the entire issue of the liquidity deficit and the challenges for the NBFCs in the short term and the medium term, I am joined by the country's top-notch finance executives in the NBFC space, Mr. Jayesh Jain, CFO Hero FinCorp, Mr. Kapish Jain, CFO PNB Housing Finance, and the association of the NBFCs called Finance Industry Development Council Chairman, Mr. Raman Aggarwal. Welcome to all of you gentlemen. It's been a pleasure joining you here. So gentlemen, I would like to start this discussion by asking you about the hot discussion facing the NBFCs. We all know that liquidity deficit is something which is present in the entire system. We have also seen efforts from the regulator, RBI, and the government in this regard. Now, the one thing that I want to start off this discussion is with the impact of the current crisis onto the economy. What will be its implications? How severe is the current crisis, do you all think? I would like to start this with Raman Aggarwal, you. Sir, can you please throw light on the kind of implications that we can see from this current crisis?
See, this whole issue was actually never an inherent issue with the NBFC sector. With one-off default which happened with the ILFS, it was that negative sentiment which has done more damage than the actual situation. And because of this negative sentiment developing, suddenly we faced a situation where the existing credit lines from banks were withdrawn. And that has created a more liquidity crunch. And the immediate impact is that the credit flow, as you mentioned in your opening statement, that NBFCs over the last 2 years had very efficiently filled the credit gap created by the banking system because of the increasing stress. Now, the credit delivery with the NBFC also now facing that liquidity crunch, it is ultimate that credit delivery which is suffering. And we see the impact more at the bottom of the pyramid. As you see the latest figures which are coming out, the MSE segment is suffering heavily, and that is primarily because they are not able to access credit. So, I think that is one immediate fallout of this whole situation which needs to be corrected.
So, Kapish, Raman is saying that the MSME sector is bearing the brunt of the current crisis. I ask you about the condition of the housing industry. The real estate is again a sector which is again severely impacted in the last couple of months post the ILFS crisis. How do you see the implications for the economy for this sector going forward, say in the next 3 to 6 months?
Manu, these are actually very early days. If you look into a broader aspects of things, liquidity has been a need for last few quarters. The debt market had been a dried up market. Rates have been going up in the US, and therefore the gap between India and US was widening, so money flow was going out. Then we had the rupee dollar crisis, and rupee kept on depreciating, and then again headed to the crisis. So money flow was anyway in shortfall. So per se, I don't see it's anything which is more coming up now. It's more because of a knee-jerk reaction which has come because of ILFS issue and all. Having said that, there are a lot of measures with the government and the regulator is coming in and doing it together and all. And I would guess that these kinds of measures, whether it is the OMO which has come in, whether it's immediate reaction to put up a team to look after ILFS crisis, cutting out their borrowing limits and all in their own debt plan as well. These are the few efforts which will show results. We see CPI coming down, IPs are still showing good numbers and all, and rupee dollar is still stabilizing. So I think slowly and gradually, and I don't really know by when, but these things should then show results and things should start looking better.
Kapish, what do you make of the recent slowdown in the real estate sector? Do you think this is a sign of worry for especially housing finance companies such as yours?
No, I would not think so. Yeah, because I think RERA came in, GST came in as well. These anyway bring in lot of governance, lot of discipline into the sector as well, right? So therefore, these things are slowly and gradually are coming into the sector to support the sector well, right? And people who are moving and behaving in a more disciplined manner would really get benefited out of it. The only thing which will result in this crisis is there would be some consolidation which will take place. So people who are more governed, who are more disciplined, and who are able to manage things in the right way will get benefit out of it. People who are not been that disciplined and have not been that forthcoming and all will be at the brunt. So in that regard, there would be some consolidation which will happen. Beyond that, it will be all good for the sector in the long run.
Jayesh, Kapish and Raman touched two very important points about their outlook of the economy. How do you read the current crisis? How severe is the current crisis for the economy?
The current crisis was, as like Kapish said, it was coming in. It was actually coming in post demonetization. The liquidity was ample, and which actually fueled the credit growth. And if you look at it in terms of NBFC sector, HFC sector, over last 3-4 years, a lot of NBFCs, a lot of HFCs have mushroomed. And what had happened was this ample liquidity available had created a competition which was driven by price. And a lot of smaller NBFCs, a lot of middle-sized NBFCs actually, in a lust to grow, actually did not price the assets properly. And which was actually like the spreads were taken care of by borrowing money at a shorter end. So ALM was, to some extent, the way I understand, was little put at a risk. And suddenly as the macroeconomic headwinds started coming in, liquidity from the system dried up, and which was like pretty evident if you look at it. The crude prices, which was like probably 2 quarters back or 3 quarters back, was like hovering around $60 a barrel, is now like has touched that high as $84. Rupee depreciated. Rupee, which was like has depreciated close to 15-18%, which was holding on. So I think this all led to a macroeconomic pressure. In terms of interest rate, it started increasing. In if you look at it in last like first half, hardly there was a long-term borrowing except for few AAA rated HFCs or NBFC. The quantum premium started coming in. Few deals which happened, but then the quantum was not there. Earlier, probably an NCD issue which would happen probably 1,000 crore, 1,500 crore size for PNB housing, right? It would happen. But then that kind of a size was not coming in. And that all little came in. If you look at the numbers also, like probably the CP, which was like 3 month CP, which was probably at a like sub 7, had moved in gradually from a 7.25 in the month of May, June, and then so on and so forth. And like it clocked to as high as 9% in the month of September. So yes, all this like probably a little bit of aggression in terms of desire to create asset and overlooking little ALM. And when liquidity crisis came in, it hit actually a standstill. And I think, see, if you look at it from a different angle, from a supply side, even mutual fund industry, which was like benefiting because of a demonetization, had gradually hit their sector exposure of 40%. So incremental funding, actually, if you look at it, 30% of the incremental funding in an NBFC and HFC sector was coming from mutual fund supply side. And if you look at it from a number perspective, I read the number at the beginning of the year, March, probably around 20% of the funding was coming from a commercial paper, and again 20-21% was coming from NCD, which increased as on September 25% as a CP, and NCDs remained, or actually NCDs came down to around 17-18%, which actually indirectly tells you that a lot of long-term funding was actually happening from a short end. Correct. So I think I would believe that yes, it's a good wake-up call, and to say that whether this crisis would recede very quickly, I wouldn't believe that. It would take time, and yes, as Kapish said, a little bit of a consolidation would happen.
So Jayesh, you're saying this will take some time to go away, though it should not be at the same time blown out of proportion, right? The current liquidity crisis. It's not a systemic issue as is being circulated across some quarters, so to say, right?
So
this is not a systemic issue.
Let me jump in here. There is one thing and a point which Jayesh made. See, if you talk of the sector today, there are 11,000 odd NBFCs registered with RBI. If you look at the number, more than 90% of them are small and medium. Now, these small and medium companies are so small that they do not have access to any other modes of funding except funding from banks and financial institutions. They do not access capital market, they do not have access to short term commercial paper borrowing, they do not have access to external commercial borrowings. So, this whole issue of ALM mismatch has been blown out of proportion to the extent the moment NBFCs were clubbed with HFCs. See, crudely speaking, any company which is financing and not a bank is an NBFC. But if you look at the way the system is structured, Housing finance is an altogether different entity which is into long term funding, right, with 10-year, 15-year funding, whereas NBFC typical funding is 2 to 4 years maximum.
Do you think that Raman's view of that this crisis being blown out of proportion is valid?
I agree. So, see, frankly, crisis is there. Now, to say whether it is blown out of proportion, yes, I would say it is blown out of proportion. We are in the business of lending, right, and we borrow money. Yes, it is actually very unfortunate that every time when we talk in a larger forum across, if you look at it, every time credit side risk is always discussed, and every month on month, quarter on quarter, in a lot of forums, a lot of time the regulators, the investor, every time they would pick up a credit risk as a issue in a discussion, and liability side risk, which is interest rate risk and a liquidity risk, usually don't get attention. It, like my sense is, like, I spent around close to 2 decades in this industry, and only thrice or 4 times this liquidity risk and interest rate risk has been spoken about. So yes, it's a kind of a issue which is there. But then, as Raman said, and I would agree, in a NBFC space also, there are 3 or 4 bifurcation you can do it. Infrastructure finance companies, which funds for 15-20 years. You can't club all NBFC and paint with the same brush, and that is actually what happening. A lot of like small companies which are like two-wheeler finance company. Two-wheeler finance company, the loan is essentially 24 to 30 months. And if 70 and 80% of their composition is two-wheeler, then how do you club it with a long-term infrastructure finance company or a housing finance company? Even in a housing finance company, there are different flavors which I can tell you. Affordable housing finance company would have a probably asset maturity profile of around 8 to 10 years. For someone like probably PNB Housing, it could be 4 to 5 years. Now, if I talk about Hero FinCorp, we are a very, very diversified NBFC. 35% of my book is two-wheeler finance. Then we do a LAP also, which is a like long and 6 to 7 years. We do mid-market SME. So my maturity profile of asset, residual maturity would be around close to 3 to 4 years. Then indeed I would actually bank on a liability side, a liability maturity profile of 3 to 4 years.
Sure. Kapish, I want to come to you. You know, you raised a very pertinent point at the start of this discussion, that this is not something new. Raising funds for the CFOs had been a problem, and this is not something which is cropped up all of a sudden. There were some macroeconomic conditions that were playing out, as Jayesh also discussed about. So I am saying we all know that there has been an ALM mismatch. Now that's for all of us to admit that, you know, that there is something which the CFOs also, being, you know, part of maintaining that liquidity, have faltered. So I'm asking you, what are the lessons going forward for the CFO especially, so that he can avert the crisis from here on?
Simanu, please understand that we all are a regulated entity, right? Whether it's the asset finance companies or the housing finance or the normal NBFCs, we are all regulated by a regulator who keeps a good tab on us. We are well governed entities. We have a board. We have stakeholders to whom we are answerable to. So beyond what the regulation prescribes, there are enough and more norms that we ourselves prescribe for ourselves to make sure that there is no such surprise which comes and makes things difficult for us. The crisis came and started in the first 10 days of September when ILFS default came in. Then we had the secondary market trade-off of a housing finance company, which resulted another knee-jerk reaction, and then the volume started coming down because there was no money in the market, right? 60 days of that has passed, right? And the biggest worry was there would be commercial paper defaults. So the first default would have happened by now. None of that has happened, right? Because the governance is there, right? Beyond what the regulator prescribes, there are enough and more norms that we internally manage on liquidity side. So if you see on paper that there is a CP exposure which looks quite high, kindly also understand there is enough backstop facility which is there supporting that. People are having cash liquid investments as well. They have bank lines available to them, which are committed bank lines. Somebody might question, you may not get all of it, but you can't just be so harsh to say all of it will go away as well, right? So there are some of these arrangements which is reasonably there to safeguard yourself, and that's precisely why things have gone fine so far, and we are right at the end of the month of November, and no crisis have come in. Most of the CP would have got rolled over for the 2 months period at least, right? So the learning, of course, is always there. You can always be better, and you can make yourself far more robust there, yeah. And so learning could be that the ALM which many firms prepare, the underlying norm basis which they are done could be more prescribed, right? Because these are behavioral ALMs. So I might have my own behavioral experience which is dynamic and changes from time to time. There could be some method to that madness which could come from the regulator or from the industry generally, which would give more visibility to read that ALM better, right? And that's again the firm itself would like to do it. We all definitely do it ourselves, and the regulator can also play a role in prescribing something like that, and we are open to that.
Kapish, I want to pick your first part and ask to Jayesh. The default that was talking about very much that it could happen. There were like lot of commercial papers worth 50,000 crore by November 9. There was a fear that it could, there could be defaults on the line. It did not happen. November 9 passed. Now there are like to the tune of 2 lakh crore worth of commercial papers due to be redeemed in the next 2 months. Do you think again with the same status quo that if we maintain that going forward this situation will clean up on its own? And again, this is a fear only, a sentiment fear and not a systemic fear as such.
See, I agree to what Kapish said, and if someone was to default, it should have already happened. But then the point to be noted is, a lot of people in the industry have slowed down. It's not a business as usual situation. Let's agree to it. September, October, November, if somebody was to say that, has it been similar to what April, May, June was? No, it is not. A lot of people have slowed down. A lot of people have lost their sleeps at night. So that says that something has went wrong. Yes, whatever precautionary measures or whatever little bit of a measures we've taken care of, that has helped avert a default side. But then on a business side, a lot of people have stopped doing or going slow on a business. So I definitely see probably by March end, the credit growth between September and March could be a very, very low kind of a thing. It will definitely slow down. Now, this brings another important point. And as per some data, if you look at it, whatever rollovers has happened in month of October and November, it has happened largely on a 2-month and 3-month side. Money at a long end is still not available. There have been only few AAA kind of HFCs or NBFCs which has been able to raise money, or a state-backed NBFCs or HFC, like they have been able to raise money. Money as general in a normal case is still not available. And a lot of other NBFCs and HFCs, other than the ones which I mentioned, which has rolled over, the rollover has happened for 2 or 3 months. So you rightly said, and I would be very, very inquisitive to see that what happens in the month of December and January, because whatever was there in the month of October and November to be rolled over has got rolled over, but then rolled over for only 2 to 3 months. And if the participation from the bank side and from the mutual fund industry and the insurance company side doesn't happen, and they continue to see the risk which actually got culminated in form of iron and FSF, and if they are little averse in terms of taking incremental exposures, I think we'll have to wait and see what happens.
Kapish, do you concur with the fear that is expressed by Jayesh that down the line, if mutual funds do not go up in terms of their subscribing power to the CPs of the companies, NBFCs, then there is a chance that there could be a real crisis as such?
See, Raman point up a very pertinent point. You need to understand that there's a very small proportion of the NBFCs, housing finance companies, who participate in the debt capital market, right? They don't qualify from a rating criteria perspective to come and play in that market, right? So for them, there has to be alternate sources of avenue of fund which needs to be addressed separately, whether through the banks or through regulatory support or whichever way. A current crisis, whether you call it a crisis or whatever, is more pertaining to those who participate in that particular market and space. If they are not able to roll over their commercial paper for longer tenure, they would need to be watchful to see how they arrange funds for their long-term borrowings in case they need for long-term money as well, right? Alternate avenues needs to be looked forward to. Like, so obviously there are alternate avenues which is slowly and gradually coming up, right? For people who hold a good deposit franchise and have a good local standing in the market, they then activate their deposit franchise to raise funds from, like what we did. Then people have the window from ECB perspective. The regulator loosened the bit. They limited the end use restriction part there. So that enabled ECBs to become more active to raise funds from. So I'm saying alternate avenues would slowly and gradually come up. 2-3 indicators which might just show that the flows to the mutual funds might just start coming in as well. When they come in, I don't know, but then they might just start coming in. If you look into IPs has been at a good steady pace of growth. Inflation is coming down. So October is even lower than September. rupee dollar is stabilizing at current levels and all. If these things behave the way they are, crude is coming down as well, from 84 it's come down to sub 75, 70 levels and all. This would help in then flows to slow and gradually start coming in. There is a global indicator, and we've always seen that if commodity index starts coming down, rates do start coming down. G-Secs have come down from 820, 830 to around 760 levels today, right. So we need to be positive here, be more watchful on things and all, and then see things shaping up, and things will shape up. Whether it's going to be a 2 month, 3 months period or whatever is only to be seen. For some industries who have slowed down, it's because of their own inherent issues with the industry. Like if the auto industry is slowing down, it's not because of the interest rates, it's because of the inherent demand being slower there, right.
Raman, I want to come to you to talk about the regulatory aspect again. As you pointed out in the beginning of this discussion, that the MSME sector, and again, the large crisis is happening, not entrenched NBFCs, it's the MSME and the small scale NBFCs which are facing the brunt or are likely to face the brunt. So I'm asking you that what is the worst case scenario for them? Adding to this is the latest development that there is no special window, refinance window that is happening. That is the latest signal given by the regulator. So what is the indication or the implication for the small scale NBFCs particularly?
See, let me tell you one very interesting fact which not many people know. Even during the 2008 global crisis, right, we had a time when literally government was out to offer a bailout package. I remember a meeting was coordinated where bankers were sitting with blank checks to NBFCs, right. It was even at that time that we as the industry body FIDC on record went up to Ministry of Finance and said we don't want a bailout. Why we say this is because it's not new. You pick up 2003 Parliamentary Standing Committee report on finance. It's been there since then, a long standing demand for the sector to create a refinance window for NBFCs, just like you have National Housing Bank which refinances HFCs. Why can't there be a refinance window open? I am not saying create a new institution. I am coming to your point. See, the whole point ultimately boils out to that those guys needs funds, right?
Correct.
Nobody wants to break the law. And as very rightly said by Kapish, that we are all regulated, the basics are very well taken care of. If today somebody is to question the basics, you are indirectly questioning the regulator. That is not the case, and that is why you have seen November has passed, 9th November has passed, and we are pretty sure all liabilities will be met. It's the question of growth, it's the question of expansion. So when you talk of bottom of pyramid, I don't need only money to meet my liabilities, I also need to grow and expand and cater to more and more people down the line. So for that I need funds. So the need of the hour today is what we have been asking Ministry and RBI is to please regenerate and reactivate Mudra. Mudra was set up with the sole objective of refinancing banks, MFIs and NBFCs. You pick up the Mudra portfolio today, it is heavily skewed towards the MFI segment. None of the NBFCs has been able to avail refinance from Mudra. Why? Because the Mudra norms are not favorable. Even this year in the pre-budget meeting we raised with the finance minister, the finance minister has mentioned in his budget speech that we shall relook into the Mudra norms. But as of now, I am sorry, nothing has been done. Mudra needs to be reactivated. It will be a win-win situation. It will be a big boost to Mudra. It will be the answer of the day for a large number of small and medium NBFCs. And it will be a beautiful situation for credit delivery for the ultimate people down the line.
No, Raman, I got your point about the Mudra, but what I am saying in practical sense, there is no refinancing window from the regulator.
Yeah.
Now, so as of now, while we speak, what is the worst case scenario for the MSMEs? As in, where could the situation, worsen for them?
See, worsen is already you are seeing. Now, see, ultimately the poor guys, if they don't get credit, what will happen? Those guys the businesses will die down. And that is something I am sure no government of the day, no regulator of the day wants to and will ever let it happen.
Sure. As of now, without the refinancing window, should we press the red button?
No, see, let me tell you. First of all, it is wrong to say that nothing is coming in. If you ask me as a trade body and as industry body, during our discussion, we feel yes, they are very much aware of it. Things have started working. If you ask me, the Mudra part is being taken care of. We are already getting the signals that yes, they are being reworked at. Already NABARD, a subsidiary of NABARD, NAP Simriddhi, it has taken up refinancing of small and medium NBFCs, even the ones who are not rated. So things have started. My only reason for mentioning this was this is a very key element which has been missed out in this whole halagulla about the whole ALM mismatch, CP borrowings and the ILFS default. Let us not forget those a large number of small guys at the bottom of the pyramid.
So Kapish and Jayesh, I want to ask you guys the same point that Raman is talking about. Is Mudra the solution to the NBFCs, small scale NBFCs? And second, I ask you the same question, that is, without the refinancing window, where is the future of those small little guys going forward?
Yes, I think Mudra would actually be a good answer for MSME sector. And just to add to what Raman said, if the circulation of money stops, the business cycle, the WCDL loan, the bill discounting, everything at a incremental, if it doesn't happen, or if the lenders stop it, there will be a stress onto the business cycle of these MSME customer, which in turn would lead to a decline in their cash flow and then their ability to service their existing debts. So I think, slowing down of a credit is actually on a big cogwheel type of thing. If you stop one wheel, it is going to stop the other machinery also. So be it a real estate, be it a HFC, if any HFC stops lending incrementally to individual housing, which in turn would lead to no further payment to the builders, and then the loans which builders would have taken, there the stress would come in. So it's a sequential, it's a dominoes kind of a thing, right? And as regards refinance, I think, as he rightly said, this has been there for like a couple of decades. I have my personal views. I think RBI is a special window directly as a lender. I don't think regulator should do something what NHB does it, kind of a thing as a RBI. But then yes, indirectly through the banks, PSUs. And see, another reason which has happened, and in fact a bit of a discussion happened in RBI board meeting yesterday, was a lot of these banks, 11 banks have been put under PSE. This has again become one of the reasons where the circulation of money has actually stopped. What had happened, the other banks continued and gradually they hit their threshold in terms of a per party exposure which was there. So the availability of a credit to NBFCs and HFCs, because these 11 banks have been put onto PSE, also got little impacted. So yes, I think the PSUs and the few other private banks have their own problem. Something should be done to ensure that the momentum and the liquidity continues and they continue to lend.
Kapish, do you concur, especially, you are the housing finance player in that sense. So you are seeing the entire picture of the NBFCs regarding the refinancing window from outside. What is your point of view on this?
See, one is that you have a regulator like the National Housing Bank where you can approach and get refinance, provided you qualify for those criteria, and you're fundamentally sound to get that from a discipline perspective as well on your balance sheet. Then now please understand, while there is a direct refinance facility from a regulator, there are banks who are there to support you as well. If the regulator supports them well, the two AMOs which came in and announced immediately in the month of September itself, which just cooled down the market a bit. Then again the announcement came in October, which again cooled down the market. Then again November came in. Clearly you can see that the GSEC yields have come down and there is some impact on that. Banks have also been given some additional space where the single borrower limits have been improved upon for them, right? So these liquidity which is being put into the market is flowing into those banks for them to support the market in general and broadly. It is now the role of those banks to then follow the same track and enable that funds to be available to the sector without being too skeptical and worried on what's going to happen. Just as what they are regulated, we as well are regulated, right?
Should the RBI open a refinancing window through banks?
See, RBI in turn is doing that with all these measures.
No, for the NBFCs particularly.
Yes, it was done. It was done in 2008
It was done,
also.
yes, but it is not being done currently as we speak.
No, I would say, see, as what I mentioned, these windows are being done through this additional liquidity supply which is flowing into those banks. Correct. And with this liquidity supply which is going to these banks should now be more forthcoming and proactive to provide these lines to the sector, whether it's the MSMEs or the smaller NBFCs or housing finance. So some of these banks are actually taking an opportunity.
No, but the OMO operation is, that is different, right? That is different, yeah.
See, OMO operation has helped a bit of a cooling down the liquidity situation, correct. But that has again got negated by the operations which was undertaken on a side to arrest the deflation of the decline of the rupee, right? So that money also got little consumed there. Now the point which Kapish is making, and I am also saying, is like, what has happened is, actually if you look at it, this is not more of a liquidity crisis because of the lack of money. It is actually loss of confidence. Actually, it's actually a problem where, Suddenly something like Island FS, a big mammoth falling down, that's a problem, and then everybody else has got little cautious. We have been talking to a lot of PSU banks, a lot of applications are pending. I'm sure Kapish would also experiencing that, and Raman also would have been experiencing that. Banks are also a little skeptical to release money while they have it.
Correct.
Right? So it's like once bitten, twice shy kind of a thing. People are not willing, the lenders are not willing to undertake that risk. And that's actually creating a little stress.
Kapish, you want to add?
Yeah, the only thing I want to add is that obviously they are my lenders, right? They are my stakeholders, they are my partners to my business. If they are having some worry, if they are having some concern, I need to address them rather than being defensive here, right? How do I address it? I address it by giving them what they are looking for. They are looking for more information. They are looking for more details. They are looking to understand your ALM better. They want to understand your asset better. They want to understand your regulatory framework, your governance framework within your organization. So that's what we are doing. We are giving those details to them and asking them to ask for more if they want, so that their comfort gets established. They take it back to their stakeholders, whether these are for banks or mutual funds, and then they draw that comfort. I can't color the entire industry with the same brush. So if there's somebody who's doing things fine and better, they would then separate them out and then be more comfortable in giving those lines of credit to those banks and to those institutions, which is the right thing to do. Right? For me, I can't be demanding all the time. I need to make sure that I deserve it to get what I'm asking for by giving these kinds of information to the lenders and the borrower.
Let's look at it this way. See, it's simple, as they're saying. RBI has taken enough steps through OMO operations. A lot of liquidity is being created. Point is that if today a sentiment for a particular sector has gone bad, right? Whereas we agree there is no inherent issue there, right? Now to address it is one way you say, okay, generally there is liquidity in the system. Or another way could be that yes, liquidity, and I dedicate some portion of that which should go to that particular sector. That puts the sentiment right. You get my point?
Yes,
so if it is available to everybody, right? So then that does not correct the sentiment which has gone bad for. So today if NBFCs are suffering from that issue, maybe a dedicated step taken for that would do a world of good. In addition to, we are not saying that what is being done is insufficient.
Is that feasible? Is that feasible?
It is feasible. It has been done. As I said, it has been done earlier also. You could designate some portion of it which could go. There are ways and means. Obviously, nobody expects RBI to do it rightly. I fully agree. It's not the job of the RBI to do. It has to be through banks, or it has to be, there are other financial institutions. You have the likes of SIDBIs and the NABARDs and system who are doing it. Who anyway, as part of the routine business, are funding NBFCs also. So we could use, there are various channels available.
All right.
So actually just to add on here, see, the problem again is a different little one. While RBI, banks, everybody is doing, but as like Raman had pointed out during his opening remark, if you look at it in the NBFC sector or the HFC sector, 80 to 90% of the assets are being held by top 10%.
Exactly.
And vice versa. Now, what happens when these kind of windows or the funds are made available, these kind of funds are actually, see, if you take a PSU or a private banks, they are again listed companies.
Correct.
They are answerable to their stakeholders. So then when they take a call of onward lending, they pick up that top 10. So the money doesn't flow into the wider system to the smaller players.
Correct.
And that's where and if you look at it, the noise or the issue which comes in, they come in from the wider people.
Correct.
Absolutely. Then you have to do is a combination of what he pointed out is, as I said, dedicated window which the larger guys will pick up, and for the smaller ones, you do that refinance through maybe Mudra or some other agency. A combination will do the job.
Even on a wholesale debt market or a money market, like what we say is like, what are the larger transactions? If you look at it, where the larger transactions are happening? How many 5-year or 7-year NCD transaction for a long fundraiser has happened?
Correct.
And who has picked up that money?
Not much.
If a AA or a A-rated company would go,
Correct.
I think there will be no taker on that long end money. Same on a 12-month CP. Hardly there are transactions which are happening foreign other than a AAA kind of a player or a state-backed finance companies. Otherwise, it is like everything is less than 6 months, less than 3 months.
Kapish, you want to add?
No, I'll tell you. If you look into some data here, the last 9 months of calendar year 2017, HFCs raised around around 88,000 crores of debt from the primary debt market. That number came down to 41,000 crore in this financial year. And even like 2/3 of it came in the first 3 months, right? So that's the kind of vacuum which has got created in the fund flow available, right? Because of global factors, rupee dollar behaving abruptly, interest rate cycle widening between US and India or the global developing markets. Some of them, as they would gradually taper down and stabilize, there are still some domestic challenges which needs to be addressed, and for which I would like maybe SEBI would need to intervene and address them. Now, for example, I can have only 12 ISINs per year for my maturity. That clogs up my maturity, right? And if I really don't need that money for that maturity, I still need to restrict my taps to those 12 ISINs, and that will have some ALM implications as well in the longer run. That needs to be addressed. The electronic bidding mechanism which has come in, that restricts and discourages intermediaries to come in, who have played a very healthy role in this segment. That again needs to be looked into. FPI's norm, where they cannot have more than 20% of their maturity in less than 1 year paper. Some of these elements really needs to be addressed, because if the economic factor improves, if these things are not addressed, that will again create some issues into the sector.
Gentlemen, let's talk about the regulatory aspect of the NBFC. So that is again a point that has been much talked about in the recent last few months. What do you think, Raman, about the risk management framework of the NBFC, especially the large NBFCs which have high risk by being of having large assets?
See, let me start by saying, Manu, that I don't totally agree and buy the argument today that NBFCs are less regulated. Let us not forget that if you keep on harping that NBFCs to be regulated at par with banks, then are we not trying to make NBFCs convert them into banks? See, NBFC by itself has been a business model which has withstood the turmoils of the times. It's not a new. NBFCs have been in business in 80-90 years, right? So, it's a different model, a unique model which needs a slightly different set of regulation. You cannot bring them, because banks are doing a lot of other things.
No, I get
one side.
Yeah.
Other side of the story is, if you say you bring in more regulation.
No, Raman, I'm just wanting to set the context, right? Whatever has happened in the last 5 or 6 months post the ILFS default. Yes. I'm talking about the risk management framework of the NBFCs, maybe large NBFCs or across the spectrum.
I think
is there a tweak required?
Whatever little required, as Jayesh pointed out, and I think Kapish also mentioned, is maybe to do something more on the short-term borrowings which has happened, which has been the crux of all these issues.
So ALM guidelines you're saying, right?
ALM is already in place. Please let us not forget, as we have already saying, there are already ALM guidelines in place which needs to be regularly reported, right? The point is that we need to look at the kind of, it could be an opportunist exposure which some companies have taken to short-term CP borrowings because of the attractive rates which they could get through. So, some kind of a tweaking in terms of putting limits, there, as to what level you can go. Agreed, there are cushions available in terms of the banking lines, etc. available. But to ensure that these do not happen. But let me also take this opportunity that let us take it as a learning for the whole. While there is a learning for the sector, we all say it's a wake-up call. I would add a point here, it's also a wake-up call for the policymakers. Why are we not looking at developing the long-term debt market? Where is it? Today, the likes of housing finance companies or the infra finance companies or the long-term players still struggle to raise long-term debts. Why? And therein, I think developing the long-term bond market is a most crucial aspect which the policymakers need to look at. That has to be done. Both have to happen together. Only then we can see that no such situation arises.
Kapish, just to add the context, you hinted that there needs to be a tweak in the ALM guidelines. So just if you could elaborate on that point, and of course Mr. Raman's point about the policymakers.
See, why does one borrow short term? Okay, now if you wish to bring parity between banks and the NBFCs or housing finance, you need to bring parity at various levels. Exactly. Banks have CASA, right? Banks have fixed deposits and they can raise, all of them are eligible to raise deposits from the market. Banks have the refinance window, whether it's the CBLO and a repo market and all.
There are none of tax benefits.
Yeah, so even if I don't go that path, there are many of these liquidity benefits, liquidity per se, which banks enjoy, which doesn't come to the NBFC and the housing finance sector. And therefore, they need to look into alternate revenues. They also need to make sure that they're pricing it right into the market, because they are competing with the same banks when they go and lend into the market in many of their products, right? So therefore, they see this opportunity to raise funds through commercial papers, which helps them in having some arbitrage on their pricing, and that helps in pricing themselves better into the market. They have their governance and risk management norms to make sure that they're not naked in this particular part. all who are disciplined have it. Regulator also prescribes them. You are also reporting your ALM to the regulator, reporting your ALMs to the rating agencies, to your lenders. So you do many of these. The only point that I was highlighting was, if I only talk about housing finance companies, apparently it looks like that you lend for long term, right? But in India, people have the propensity to pay it early, right? So it's not actually that long. It just comes in early. A home loan normally gets done by around 6 to 7 years time, right? But so therefore, people make their ALM, and the ALM is basis behavioral pattern of your own borrowers, right? And therefore, it might just differ from one company to the other for all the right reason. But then, if you bring in more visible mechanism when you are building those ALMs, which could be prescribed by the regulator, the readability of it from a third party can improve. And there's a few things which I wanted to say can help.
Kapish, could you suggest what kind of visible frameworks or tweaks could be brought up by the regulator in order to enhance the entire risk management framework or the ALM?
So today the regulator only prescribes that it has to be on a behavioral side, right?
Yeah.
So regulator has the industry data. Right?
Correct.
On industry data, they know that the industry, the home loans in general, gets done by around 6 years, 7 years time. So they would just say that follow a 6-year pattern, unless you have a real aberration from the industry, because you're a startup or you're a really seasoned book. If you are different that way, then come and showcase to us. Otherwise, follow a defined pattern so that it can be uniformly read by everybody who's making that ALM, right? These are one of those things. So go by industry information that they have broadly with them, and then prescribe that even if you're building on behavioral, your behavioral should be set by around 6 years or 7 years for this particular asset class, or 4 years for another asset class, or 7 years for a different asset class and all. So that when I'm making those ALMs, it could be better read.
Jayesh, what do you feel about the ALM guidelines framework? Because RBI's deputy governor has made it very clear that there is a need to relook at the ALM guidelines for the NBFCs. So in that view, and considering that your organization itself is preparing for the IPO and may have plans going forward to list itself, what does this mean for the entire corporate governance structure for your company, sir?
You see, so frankly, I have a little different view than what Kapish said in terms of tweaking ALM.
Yeah.
I think, frankly, if you look at it, regulations by regulators are like a little framework, and they are done for mass, right? And every company would have a different kind of a product profile, liability profile, and behavior, like everything would be different. So, and my another take is like you can make as many as regulations you want to make it. It's actually a self-discipline of every companies, and since they know what their company is all about and what are the risks which they are undertaking, and accordingly they make it. So as he rightly said, like housing finance company, while the loans may be given for 15-20 years, the behavior could be 6-7 years.
Correct.
And to keep an eye on that, whether 6 to 7 years is becoming 8 to 9 years in a gradual manner, or it is coming down to 4 to 5, it is the responsibility of the company. Same way, even if I talk about NBFC, it could change. Suddenly, if I try and look at my company, say for example, from a retail, a two-wheeler company product which is like 33%, and in a 2 years time, I try to be little wholesale kind of a thing, the shift would be there.
Correct.
And I would know as a CFO that what am I trying to do and what should I do.
Correct.
So I don't believe in too much of a stringent regulation. I think considering the vast like different and large number of NBFCs, large number of HFCs with a different product profile, different kind of a customer segment, it has to be only directive. And probably the only thing which could, I think is like, I always feel that India as a country, we need a lot of regulatory monitoring and little bit of imposition and ensure that the laws are, or the guidelines are being properly followed. Maybe a little more stringent kind of a follow-up and monitoring by the regulator.
Correct.
So when you give a leeway, I think people tend to misuse.
Correct.
So if you don't pick up a vehicle, so we were like before the session started, we were talking about a no parking thing like it, right? Something like that. So unless couple of times the fines are not given, I think people don't get disciplined.
Correct.
So probably I think I would actually recommend RBI to go a little stricter.
Little stricter.
Yep.
Okay, so there you have their divergent views. Okay, so Kapish, I want to come to you to talk more about risk management framework and the role of the CFOs in that. So loss of confidence for lenders as well as investors is what Jayesh pointed out earlier. How can as a CFO restore this lost confidence for both of his stakeholders, including bankers and equity holders?
So Manu, if I have to talk about particularly about our own experiences over the last few weeks, we actually did not raise a single money in the entire month of September when the real storm was in play. We really planned ourselves well on the liquidity side, and we kept on improving on our discipline in terms of short-term exposure as well. And that also helped in giving that visibility to the market that we are regulating ourselves well from a self-discipline perspective as well. Purely on how we can bring in more confidence there is, as I said, somebody is questioning on the authenticity and on the credibility of the operation of the organization, and therefore you need to be more forthcoming in addressing those concerns and worries that somebody is bringing on the table. Give him the information that he's looking for, give him the data that he's asking for, giving that visibility on your ALM structure, your governance framework. You have a ELCO, you have a risk management committee, you have a board level committee, you have various internally defined voluntary ratios that we ourselves track, whether it's on short-term liability, whether it's on single borrower limit, single exposure limits, sectoral limit. So many of these defined internal norms are there for liquidity, which is much beyond what the regulator prescribes. If you give the lenders or your borrowers or the rating agencies those understanding that these disciplines are there to govern ourselves on our own, they draw comfort from there. And if people do more of that, that will bring in more of this confidence back into the sector and into the market.
All right. Raman, you touched upon that aspect where you said that it's time that the regulators also, up the ante in terms of its framework as such. What do you think, are the regulatory expectations of the NBFCs?
As of now?
Yes.
See, as I said, my point was one on the, that was more at the policy level in terms of developing long-term debt market. Apart from that, if you ask me today, I don't vouch for any extra regulations coming in. I would more go by, even Jayesh pointed out, in terms of better implementation or better monitoring rather than adding more regulation. And I think that has never helped. Forget about this, any human aspect you pick up, more and more policing will never help. You have to incentivize and facilitate the system to become more compliant rather than putting in more and more regulation. That never helps. So I think a better kind of a facilitating scenario would be a more desirable solution than expecting some more regulation coming in. That I don't think will do anything.
The another thing which probably I would like to add, while I said that for enforcement a little bit of a close monitoring, I think lot of smaller NBFCs and a lot of NBFCs which are coming in over last 5 years or so. I think RBI and NHB should conduct a regular training program in terms of that, looking into it, rather than probably, yes, I did said that penalize kind of a thing, but maybe before penalizing, a lot of hand-holding, a lot of guiding. I think those kind of a thing should happen. And see, at the end of the day, let's look at it, coming purely from a HFC and NBFC perspective. In the economy today, the one thing which HFC and NBFC does is going to the last mile, to the smallest of the town, to the smallest of the village.
Correct.
And RBI has gone on record and said that the banks are lazy bankers.
Yeah.
The country needs NBFCs and HFCs.
Correct.
What PNB Housing, what SDFC, what Guru could do, or what Hero FinCorp or what Shrey could do, I don't think many of the banks would not be in a position to do it. So to say that whether NBFCs and HFCs are not required, not that way. It is impossible to see a system where they don't exist and only banks exist.
So Jayesh, two quick expectations from Hero FinCorp CFO from the RBI.
I think frankly,
what is a CFO you want the RBI to make your sleep more comfortable?
I think so. On a few regulatory changes, probably I think Raman has also said, and I have also said, painting all NBFCs into one color. I think we need to demarcate NBFCs into 2 or 3 categories, and we have already given suggestion to RBI formally. I think that should happen. And secondly, when the funds are being given to the banks and the bank makes allocation, there should be some monitoring and some further bifurcation of the funds which should be further deployed. It should not happen that only the top 2, top 3 takes it. The credit should get disbursed at a mass level. It should not get concentrated at in the hands of few. I think it requires to be lot more socialist kind of a thing rather than so I think these are the 2 things which probably I think. And one just to add one thing on a risk management and the concern, I think, see, at times, let's think from an investor side also. They will get concerned when someone like AAA rated ILNFS goes belly up. investors also are custodian. Let's be fair to them. Like a lot of investors in terms of a mutual fund insurance companies would probably take a hit or haircut. It could be as high as 50% or 40%, right? And they all are answerable, right? And they in their fairness have to be little cautious and conservative. So I wouldn't, frankly, everybody understand the system, everybody understand what all is. It's just a time. It's a tough time, and it would actually with the time passing only it will get over. You can't do much. If you try and do much, and I've seen like a lot of people doing much on a September and October first week and September last week, it did not help.
Correct. Kapish, do you agree? And also, what will be your expectations? Of course, you have a different regulator in the form of NHB, but of course, NHB is a subsidiary of RBI again. So, your expectations from the regulators as such, and of course, yeah, do you concur?
See, the sector requires long-term money, right? Like what Raman mentioned, the depth of the market is still not there in spite of so many talks being happened, right? So the depth have to come in. How will these depths come in? These depths would come in like the regulator RBI talked about a few days back about partial credit guarantee to be made available to the sector and all. But still, banks are not very forthcoming to give that partial credit guarantee for whatever reason. They still feel that somewhere this money in this particular product is not as high as what they can potentially make through funding limits and funding lines. Or there could be some other reason, but still they've not been forthcoming here. The debt capital market per se, like all the SEBI restrictions which has come in because of ISIN, because of the EBM window and all, and because of FPI limitations, that is also not creating that kind of liquidity into the sector as well. So some of those relaxations I think would be needed. CBLO as well needs to be available for refinance to the larger and the bigger housing finance NBFCs, so that they can arrange for liquidity with the assets that they have in terms of securities and all. Some of these measures will really help and go a long way in raising and correcting the ALM and get them long-term money.
Okay, Raman, I want to come to you with the last question, which is around the way forward for the NBFCs and HFCs, and as well as for the policy makers.
So for the policy makers, as I said, two quick things which need to be done. One, to address the immediate sentiment, right? Some dedicated liquidity window needs to be provided, and yes, that has to come through banks or some financial institutions, and also support these small and medium sized players by tweaking the Mudra norms. That is the clear indication, and that's what we've given in writing to the ministry. As far as the industry is concerned, we are obviously, as we see today, no issues as pertaining to meeting our liabilities, but the growth has definitely affected. Our figures show that from September to October itself, the disbursements came down by 10 to 15%, and if you factor in the growth of 10 to 15% happening, so the overall effect is about 25 to 30% which has happened. So this will continue for some time, because right now, as we are all saying, the focus is on maintaining liquidity to ensure that there is no issue of any liability defaults happening. But to ensure growth, we need support.
Kapish, what is your growth outlook in terms of the NBFCs? We all know that they have been supporting MSMEs and the lower players in the entire spectrum. So as you have put it out in the start of this discussion, that you don't see this continuing for very long. I'm saying this slowdown will exist for how long? Like next financial year? Till
very
next
difficult to
year?
put a mark there. Very, very difficult to put a mark there unless I can predict the future. But then you need to see how things actually get addressed is when things will flow back. And so people don't react to events, they react to measures. So whether it's the policy measures and those things which come into play. So as the dust for now settles down and people are tested, whether it's the housing finance or the NBFC, that they are able to roll over their CPs and their liquidity commitments and all, that will bring in some comfort and confidence. As you start looking into the macroeconomic factors improving, whether it's rupee dollar, whether it's on the interest rate side, if they start stabilizing and if the crude comes down as well, that will start flow of money coming back into this country. And that will bring in and support the next supplement of growth. Right? So I think these are the 3-4 factors which will play a big role in things stabilizing sooner than later. Whether it's a 3 months time or 6 months time is very difficult to predict.
All right. Jayesh, your concluding remarks.
I think so. I would actually concur with what Kapish and Ramanji said. It will take a while. There is no definite answer. There are a lot of variables which would impact the measures by the regulators, the sentiments on the investor side. My biggest fear is is that this liquidity side crisis should not result into asset side crisis. So probably I'm not sure how much it would continue. If it continues something like this, what Ramanji said, a 10-15% decline in the disbursement, and if it culminates into a 20-25% in next 3-4 months or so, I think we can look at it, and history is full of examples where asset side risk have been followed by liquidity side risk. So let's see and hope for the best. I'm an optimistic guy, and I think next financial year should start on a good note with a normalcy coming back.
Great.
I would
Jay-
suggest one needs to be cautiously optimistic and be watchful of what's happening.
So
in the
you added
market.
a word of caution on that optimistic note, right? Thank you, gentlemen. I'll leave it here. Thank you so much for your time, and thanks for watching. Yeah.